What will happen to Bitcoin during the next financial crisis? So in this video, I won't only talk about Bitcoin and cryptocurrencies, but I want to take a big step back and look at the global economy as a whole and the looming financial crisis that's going to happen in the next few years. This will be the first financial crisis that Bitcoin will have to endure. So if you've bought Bitcoin recently or in the last few years, or you're thinking of buying Bitcoin, then you need to watch this video to see how a financial crisis can impact your investment. Since I do not want to waste your time, I'll post some timestamps down below in the description and in the comments to the key parts in this video. And if you're new to the channel, then I'd appreciate if you hit that subscribe button. So many people believe that Satoshi was not happy with the economic situation at the time and how the centralized financial institutions operated. The bank bailouts and so on, it was crazy then. At the time, Alistair Darling was preparing a £500 billion rescue package for UK banks, and the Bitcoin network went live on the 3rd of January 2009. Is that coincidence? I don't think so. A financial crisis can occur if institutions or assets are overvalued, and it can be fueled by irrational investor behavior. A rapid string of sell-offs can further result in lower asset prices or more savings withdrawals. If left unchecked, a crisis can cause an economy to go into a recession or depression. I think before we look at the two scenarios that can happen to Bitcoin during the next financial crisis, it is important that we look at a few other asset classes and see what happens to them during a crisis. Let's start with gold. So gold price is widely followed in financial markets around the world, and gold was the basis of economic capitalism for hundreds of years until the repeal of the gold standard, which led to the expansion of fiat currency system in which paper money doesn't have any implied backing, so no gold to back the money. Gold is quoted in US dollars and is the common method for measuring the value of gold across the world. Gold has stood the test of time of being a safe haven during economic turmoil, and it's often used as a hedge against financial crisis. It usually has an inverse correlation against the United States dollar and is an excellent asset to track. The Standard & Poor's 500 index, S&P 500, is the most commonly used benchmark for determining the state of the overall US economy and makes perfect sense to be included in any performance comparison chart. So if you look at the chart, you've got a 339% growth since the last recession, which is pretty incredible, so good performance. Australian dollar versus United States dollar. The currency pair tells a very interesting story and indicates how many Australian dollars, the quote currency, are needed to purchase one United States dollar. And the interesting part about it is this major pair is good comparison candidate due to the fact that during an euphoric market, risky currency trades do well as they usually have higher interest rates, which imply higher growth. And they're also indirectly linked to commodities. Australia is the largest coal and iron ore exporter, and therefore the plight of its currency is heavily dependent on commodity prices. VanGuard FTSE Emerging Markets ETF. This ETF invests in stocks of companies located in emerging markets around the world, such as China, Brazil, Taiwan, and South Africa. It is a high potential for growth but also high risk. The share value may swing up and down more than that of stock funds that invest in developed countries, including the United States. iShares 20+ year Treasury Bond ETF. This ETF seeks to track the investment results of an index composed of US Treasury Bonds with remaining maturities greater than 20 years. Generally speaking, bonds are a safe play during recession as interest rates decrease, whereas bond value rise. However, not all bonds are made equal. The safe play applies to bonds with a good credit rating, such as AAA corporate bonds. This ETF consists of US Treasury bonds which have a very good credit rating. iShares 20+ tend to peak before the beginning of a financial crisis. This makes sense since a lot of people want to find a hedge to save their assets. So what will happen to Bitcoin? We've got scenario number 1. During an euphoric market, retail and institutions are more risk-seeking investing in assets that have a higher yield potential. In this graph, you can clearly see that the assets that got hit the hardest during the economic turmoil were the riskier ones. You've got the VanGuard FTSE Emerging Markets ETF and the Australian dollar, taking both a more or less 80% hit from the all-time high between 2006 and March 2009. And in comparison, safer assets took a hit of around 30%. Now that's out of the way, it would come as no surprise that Bitcoin could get into some serious trouble during a financial crisis, as it can be considered a high-risk investment for nearly 10 years and still remains a highly speculative asset that is purely driven by supply and demand. Scenario number 2. Gold has been long considered a safer asset during times of economic turmoil. Bitcoin has been long called digital gold for a number of reasons, and although Bitcoin set out to become a digital currency, it also performs exceptionally well as a store of value. It shares a number of characteristics with gold, such as scarcity, durability, fungibility. In addition, Bitcoin has possibly some even better properties that gold doesn't have, and these include, you've got the storage. Bitcoin is digital, gold is physical. It's divisible. Although gold can be divided, it can't be divided easily and nor in a high precise manner. So where does all this leave us? Well, basically we have these two scenarios. We've seen how other asset classes performed during the last financial crisis, and we know how we expect these asset classes to perform in the same way during the next financial crisis. We don't have that much data to look at for Bitcoin, so we don't really have any past data to see how it performed during the last financial crisis, so it's very difficult to see how it's going to perform during the next one. We can just more or less compare it to an asset class that is very similar to Bitcoin, and that would be gold. And I think one of the most important aspects in determining how Bitcoin will perform in the next financial crisis is investor confidence and liquidity. So if investor confidence and liquidity are high, then it's very possible that scenario 2 plays out during the next financial crisis. I think it's very important to see how the price of Bitcoin develops during the next halvening in around 6 months' time, to see how the investor confidence is, if more liquidity is coming back into the market. And I think that's a time when we better determine what's going to happen during the next financial crisis. Thanks a lot for watching this video. Really happy that you're part of this growing community. I appreciate every single one of you that's watching this video. And yeah, I can't thank you enough. I really love all the comments, feedback that I'm getting, and if you've got any, don't hesitate to leave them down in the comment section below. I do my best to answer every one of you if you've got any comments, feedback, questions and so on. Thanks for watching. I'll see you on the next one. Bye bye.